Hey, good morning, everybody. It's Mike, your co-host for Multifamily Unplugged, Saturday morning, live unscripted, raw radio, where you get it right here firsthand. My co-host Moose is on Clubhouse this morning because he can't seem to find his way to a computer again. Moose, what's up?
How you doing, Mike?
Good, good. Glad that you're here. At least you made it, anyhow. So obviously you had an easy night last night. I think you were skating with your son, right?
Yeah, that's right.
Yeah, good.
Here firsthand.
So, anyhow, it is Saturday morning, Multifamily Unplugged. We have a great guest today, Brian Davis, who joins us from Spark Rental. Brian, say hi. Just really quick, just say hi.
Hi.
That's it. Good. Glad that you're here. We'll get back to Brian here in a minute, but hey, we're here having some fun. So sit back, grab your coffee. Remember, I always say, go tell somebody that we're here, wake them up, put a breakfast in their lap or coffee in their hand, sit back and enjoy this ride because who knows where we're going to go. You know, Moose, Carl, or Brian asked me this morning, he said, what are we going to talk about? I said, I don't know, but we'll figure something out. We'll wind up in some rabbit hole and trying to figure out how to get out. But that's how we do it, isn't it?
Yeah, exactly. Brian, I thought you were bringing the topics today.
Yeah.
Right. I mean, I can rant and rave with the best of them. So just set me loose and we'll do it.
So let's set this up. So we are live on Facebook, live on Clubhouse. If you are on Clubhouse and you want to come up on stage, raise your hand. We'll bring you up on stage. There's not too much interaction from Clubhouse, but I'll circle back once in a while and ask if you have a question for our guest. Glad that everybody's here this morning. We are live on Zoom and we are going to take a ride. First, let me just remind everybody and ask everybody, please go like us and love us. Carl and his company, your focus guy, helped sponsor this event. My core intentions and Mike Morawski sponsor this event. So we're glad that you're here, but go to our social media. Anywhere where you get your social media fix, we hang out, right? So whether it's Twitter or LinkedIn or Instagram, go find us, like us, love us, follow us, subscribe to us, all that crazy stuff that just kind of helps us get along. Hey, let me just say hi to a few people. Steve, good morning. Steve, you need to call me because I really want to check in with you on that video you sent this morning because I want to do that. So Fred, John, Rachel, good to see you on Clubhouse this morning. Glad everybody's here. Like I said, if you're on Clubhouse, raise your hand if you want to come up on stage. Brian, glad that you're here. Hey, let's kick this thing off. First, I want to say, Brian, you're going to be glad to know that you made the cut for 2020 or 2021 because you filled the last opening that we had for this year, and we kind of put this together at the last minute, really pulled it together. So I would just want to thank Tara for helping us do that, and my assistant Emma for helping pull all this together. So, and Anna, who I can never get anything done without the help behind the scenes, right? So just thanks to everybody for helping pull this together. Glad that we're here this morning. But you did make the cut for 2021, which is good, and I can't believe that we're already saying November, December, Thanksgiving, and Christmas. And, it's the end of the year. Where the hell did it go? Hey, Brian, why don't you introduce yourself? Tell people who you are, where you're from, and what's up in your life.
Right. Well, I am the co-founder of sparkrental.com. My partner, Denny Suplee, was unable to make it today, so you're stuck with me. But Spark Rental is it's both a property management software for individual landlords and smaller property management companies. It's also an education hub. We have free online courses about real estate investing, building passive income from rental properties, replacing your 9-to-5 income with it. We have hundreds of articles, podcasts. We do webinars. So we really consider education and software and free tools to be the two pillars of our business.
Well, we're definitely here about education, that's for sure. Where are you guys from? Where are you out of?
The company is based outside of Philadelphia. I am personally in Brazil. My wife is an international school counselor. So we were in Abu Dhabi for a few years. We've been in Brasilia, the capital of Brazil, for a few years. Who knows where we'll be next year?
Well, that's really cool. So I have a great Brazil story. So
Oh,
I have a friend who had a very high powered job in the city of Chicago, hated his job, worked for Mayor Daley years ago, hated his job, wakes up one morning, and I used to tell him, I said, quit, just quit your job, just stop it already, quit bitching about it, and just quit your job. No, I can't, I feel obligated, I have all this to do. I said, look, man, then quit bitching about it, I don't want to hear about it anymore. So I don't hear about it for a few months, right? I wake up one morning, he's ringing my phone. And I said, what's up? He said, I quit my job. I said, I'll quit. I'm going back to bed. I'll call you when I get up. You're lying to me. He goes, no, really, I quit my job. So he meets this woman from Brazil here in the United States. She's an attorney, falls in love, quits his job, moves to Brazil, sells everything here, buys a little watch repair shop, and is fixing watches in Brazil. So they get married there. We go to Brazil for this wedding and wind up in the mountains. From we flew into Rio and wound up in the mountains in Piridentes, um, for this wedding. One of the coolest experiences I've ever had in my life. So,
that's awesome.
yeah,
I love stories like that.
yeah, yeah.
I mean,
So,
life is too short to be slaving away at a job you don't like. And that's, that's something that we feel very strongly about. We're proponents of the FIRE movement, which I know not everyone is into, but you should be doing the work that excites you. And if you're not, then you're doing life wrong.
yeah, absolutely, 100%. I agree. I couldn't agree more. So well spoken. So tell us a
Yeah,
little bit about your tech. Oh, go ahead, Carl. Sorry.
No, I was just going to say, before you do tell us a little bit about you, absolutely, Mike and I talk about that all the time. A lot of people that want to get into multifamily, the real question that they should always ask themselves is why, right? Like, why do you think you want to do that? Because that's really the starting point. If you don't know why you want to do multifamily or anything, you're going to be doing it for reasons either the unknown or the wrong reasons. So that's great. So anyway, yeah, tell us about yourself, your journey, how you got here, and then we'll circle back to multifamily.
Sure. So I graduated college back in 2003 with a psychology degree and a criminal justice degree, and I had no idea what I wanted to do with my life. And I went to work for a guy who was friends with my stepdad, who was a co-owner of a subprime mortgage lender, which was quite a big thing in those days, as you guys remember. And I pretty quickly started working with the two owners of the company on their private hard money loans to real estate investors. The business itself, it was a nationwide lender, and most of what they did was working with homeowners. But I worked with the two owners and mostly lending their private money to flippers and guys doing like the Burr method, where they would buy fixer-uppers and renovate and then keep it as a rental long term. And I watched all these guys, these investors, making just money hand over fist in the mid 2000s in real estate. And I of course have the mentality, why don't I do this myself? What's to stop me from doing this? Everyone else is doing it. So I promptly went out and I bought up a whole bunch of low end rental properties in Baltimore City, which is itself, a whole other set of mistakes. But I didn't take the time to learn the fundamentals of real estate investing, basic things like how to accurately forecast cash flow when you buy a property, pretty basic stuff. Part of that is being young. I was in my 20s at the time. Part of it was the crazy bubble market that we were in. Everyone was making money in real estate, and a lot of those people were not very qualified. So, it's not a plot twist. You guys know where this story is going. 2008 hit. The bubble burst. Those properties lost a ton of value. There had been a lot of not foreign, but out of state investment money in Baltimore City at the time, in Baltimore City housing, a lot of DC investors, a lot of New York City investors, and all of that money dried up overnight from these lower end neighborhoods. And a lot of these neighborhoods that were kind of on the cusp of turning the corner just collapsed back downward. So I lost a ton of money in these properties. And it took me over a decade to really dig myself out of that hole. Is the bad news. The good news is that it did kind of sculpt a different career path for me. I went on, from being an account executive for a hard money lender, I went on to work for a guy who had started an online company servicing landlords, selling legal forms for landlords. And that's something that I never would have done if I hadn't been a landlord myself, if I, hadn't invested in properties myself. And I got interested in that online space of servicing mom and pop real estate investors, mom and pop landlords. And then in 2016, Denny, my partner, and she and I worked for that other company as well. We split off, started our own company, and we still service mom and pop landlords.
Brian froze up.
Oh, I'm sorry, Mike. What was that?
You kind of froze up there for a minute, so kind of lost the connection. So.
Oh, I'm sorry about that.
Oh, and it happens, right? So that's pretty interesting. But you know what? Here, so a couple comments I just want to unpack. When it comes to the criminal justice thing, I'll be a perfect guest on your show.
Looking forward to it.
And then the other thing is, hey, listen, nobody gets to the success until they have some failures. So having deals implode, having problems happen, having situations happen, is part of the process. It's part of the journey, right? And it's how we discover where we're at today and where we're going. I'm probably more engaged today and want it more today than I ever did because of my failures, right? What do they say? They say success is the best revenge, right? So when it comes to that kind of thing. But Carl, you got a great story about watching somebody else get successful around you and you wanting to do the same thing similar to Brian's.
Yeah, I was in the banking business for a long time, and I saw the people around me buying real estate properties. So, we bought, we started buying buildings, and it was back in 2003, 2004. And we got clobbered as well. Didn't really know what I was doing. Didn't have a mentor. Didn't have a coach, and just wrung it, and it didn't work out. But that's a whole nother story. So. But and it led me into other things as well. So, it's we all have we have similar stories when it comes to this type of stuff. But at the end of the day, we learn from our mistakes, right?
It's tuition.
Yeah, absolutely. So go ahead.
I was just going to say, in real estate investing, you're going to make mistakes in your first few deals, and some of those mistakes are going to cost you a pretty penny, most likely. And you can run away and never invest in real estate again and say, oh my God, that was horrible, or you can consider it tuition for education, right? And then you can turn around and use that education to go out and actually make money on your next deals moving forward.
Yeah, I like that. Actually go out and make money on your next deals, right? That's what happens, right? Is because you learn, right? So what did I tell you at the beginning of the show? I said I have this story of being grew too fast, very unstable, undercapitalized, over leveraged, and you don't pay attention to the details when you're in that position. So ego takes over, pride takes over, and boom, all of a sudden things change. And people's lives can change in an instant. So for the positive and the negative. So it's what direction you move in. Let me reset the room real quick. Hey, good morning, everybody. You are joining us for Multifamily Unplugged. We're here every Saturday morning at 10 o'clock Central Time. If you are joining us on Clubhouse, I'm glad that you're here this morning. If you want to raise your hand and come up on stage, if you might have a question for Brian or join in the conversation, we want you to do that. If you're on Facebook, good to see you this morning. And Zoom, always good to have you guys as guests. So I'm glad that everybody's here. And if you have questions, use the chat. Come up on stage on Clubhouse. We'll get your questions answered. So Brian, take us for a ride.
So, I mentioned that we're interested in the FIRE movement, in helping people replace their 9-to-5 income, or at least their kind of high octane careers that they don't love. Everyone that I have met in the FIRE movement, they never actually retired when they quit their job. They went on and they did work that they were passionate about that doesn't necessarily pay as well, right? But that whole notion of going and sitting on a beach somewhere and sipping Mai Tais for the rest of your days, and the rest of your days being like 50 or 60 years. That's just, it's a fantasy. No, you would be bored to death after a week of doing it. But so instead we encourage people to kind of think holistically about what is their ideal lifestyle and how can they get there, long before they can actually replace their current salary with rental income from real estate or dividends from stocks or whatever it is. You can probably make a shift in your career to something that you're much more passionate about, and if it involves a pay cut, then you can make up the difference with passive income from your investments, whether those investments are rental properties or REITs or high dividend yield stocks, whatever it is. But we really want people to be thinking from like a lifestyle design perspective. And it looks like Mike just joined us on video.
Yeah, I don't know what happened there. Sorry.
Although he's muted.
Jeez, sorry, I blew the whole thing up. I apologize. Let's leave.
No worries. But yeah, I mean, I try to encourage people to think holistically, both about their career, also about their personal finance and investments. I mean, not every penny of mine is tied up in real estate. I have a balanced stock portfolio and real estate portfolio, and it's all about kind of working towards that ideal life that you want.
So you say you have a balanced stock portfolio and a balanced real estate portfolio. Is that because you've had some loss in the past, or is that a way you've always thought? And I ask that because my philosophy is I've always been top heavy in real estate, in everything, right? And just because I believed it, I have bought in to, wealth being created, 90% of the wealth being created in the world has been created by real estate. So I was always top heavy there, right? And is that something you learned or grew into, or what?
So I invested a disproportionate amount of my net worth into real estate when I was younger, and then of course got burned pretty badly. But the older that I've gotten and the more I've learned about personal finance and investing, which has actually taken on a whole life of its own. I do freelance writing for a bunch of websites on personal finance and investing as well, in addition to the real estate side. But the more that I've learned, the more I've come to realize that real estate and stocks really serve complementary purposes in your portfolio. They have strengths and weaknesses that complement each other well. So stocks are highly liquid. You can buy and sell them very fast, instantly in today's world. And that liquidity translates to volatility, right?
Right.
So, stock or real estate, on the other hand, is very illiquid. It takes months in many cases to either buy or to sell. It's also much more stable. Rents are much more stable. Home values and real estate prices are much more stable. So they serve different functions. And you want that diversification so that if one asset class gets hit by a shock, you don't get wiped out completely. The other asset class can prop you up in the meantime while the asset class that got crushed recovers. So, when you're a landlord, for example, imagine you're retired, you have some rental properties, you have some stocks that you gradually sell off to live on, and the stock market crashes. So you can lean on your rental income a little bit more, right? You can maybe defer some maintenance and some repairs. You can really focus on keeping your tenants and reducing your turnover rates, and lean on that rental income a little bit more heavily, so you can leave your stock portfolio untouched while it recovers. Or maybe you get hit by a bunch of vacancies all at once on your real estate portfolio, and your income there takes a hit. You can lean a little bit more heavily on your stock portfolio. So I truly believe that investors should have both. They should have diversification because they serve different roles in your portfolio.
Yeah. Okay, great. And that makes a lot of sense. Carl, anything you want to chat about?
No, I mean, it just illustrates, how things come up. You might think you might have the perfect plan and you think you're moving forward on a path, and then, the universe will throw you a curveball. So
it always does.
It happens to all of us, and I think the key there is, if you can align yourself with good partners or have a good mentor or somebody that can hold your hand, which I was very fortunate. A lot of my clients in the bank had a lot of experience in multifamily, and when I had an issue, I could use them as a sounding board or somebody that can help me through. So yeah, and the key thing here for people that are listening that have never done multifamily or never purchased multifamily, don't get intimidated or don't get shut down by what we're talking about. Because remember, Mike and I, we've had a lot of experience. However, we started in the same place you did. We all had one building when we got started, and so just listen, learn, and when you're ready to pull the trigger, have somebody that can help you through that process, and then just take the next step, and things are going to happen, and you just be persistent, move through them. So that's all I have.
Yeah, absolutely. Let me just reset the room real quick. Hey, welcome. You are Multifamily Unplugged. We're here every Saturday morning at 10 a.m. Central Time. Today, our guest is Brian Davis from Spark Rental. If you are joining us on Clubhouse and you want to come up on stage, raise your hand. We'll pull you up on stage. If you're on Facebook, glad that you're here. And if you're on Zoom, we're glad that you're here this morning. But we're down some rabbit hole here already that we're trying to figure out a way back to the top. So if you have questions, let us know. And Brian, let me ask you this. Talk about Spark Rental a little bit. Who are they? What do they do? Mission?
Absolutely. So our mission is to help everyday people, middle-class people, build rental income on the side of their full-time jobs. So we are not typically servicing full-time real estate investors, people like you guys who have a huge portfolio of multifamily properties. These are people who want to build some passive income from real estate on the side of their full-time jobs, and maybe eventually ditch that day job, whether to become a full-time real estate investor or to go do something else entirely. So to do that, we offer property management software that's mostly free. I think the only things we really charge for are tenant screening reports and state-specific lease agreements. But we have online rent collection. We have rental listing syndication to a whole bunch of websites like apartments.com and forrent.com. We have just started reporting rent payments to the credit bureaus, which is a nice carrot and stick to help encourage on-time payments. You reward your tenants who pay you on time, and it is a negative consequence for your tenants who pay their rent late or default entirely. We have state-specific eviction notices that are all free, and other tenant letters. So we want to keep it as easy and as free as possible for people. And then the other pillar of our business is really education. Teaching people all of the mistakes that we made when we were younger, all the mistakes that cost us quite a bit of money, so that they don't have to make those mistakes firsthand. They can learn those lessons the easy way from other people's mistakes. And we host webinars. We have free online video courses. We have an enormous blog, a weekly podcast. Education is very, very important to us, and we try to give almost all of it away for free as well. We do have one premium course on how to reach financial independence with real estate, but I would say that 99% of our content is free.
So here's what's interesting, right? It's really noisy. We're in a small space. Multifamily apartments, is generally a pretty small space inside the real estate investing space, right? And property management, something that should really be talked about more often, doesn't get talked about that much, right?
It's boring.
Right. It is boring.
But it's essential.
Yeah. So I did a one-day boot camp this year on property management, and I think people's eyes glazed over when I started to talk about a list of 55 different things that a property manager needs to do in the course of a tenant's life, right? Not today, not tomorrow, but over a year, maybe even over 2 years. What are those tasks that need to be done? And it sounds like you've kind of streamlined some of that by having this software, and yet you don't charge for most of it. You give it away. Go figure.
Yeah, so our goal is really to make this as painless as possible for these part-time landlords. We know that they all have a full-time job somewhere else. landlording and property management is not their day job. It's not their full-time job. So they need it to be as streamlined and as automated as possible. So we are all about automation and trying to keep that process as pain-free as possible for the landlord. And we encourage them to think kind of holistically about the tenancy life cycle, right? Going from a vacancy and advertising, and then tenant screening and collecting rental applications, to signing lease agreements and the move-in process, and then maintaining on-time rents, and making sure that you maintain discipline with your tenants, because tenants will push the envelope. They're going to see what they can get away with. They'll push your boundaries, and it's your job as a landlord to defend those boundaries in a professional and legal way. And then the move out process. So there's this whole tenancy cycle, and landlords, especially novice landlords, don't necessarily think in terms of that holistic kind of tenancy cycle when they think about property management. So we try to anticipate their needs for the next step in that cycle before they actually need it, so we can have it ready for them.
Yeah. So how much of any do you do any physical management stuff for owners, or it's all automated software? That's it.
So one feature that we are in the process of adding to the software, we're partnering with a company called Latchel, who does they're a maintenance concierge service for landlords and property managers. Mm-hmm. So if a customer wants that service, they pay a small monthly fee, and there are different levels, there are different tiers of service for it. And then they can give a phone number and an email address to their tenants to contact if there's a maintenance problem at the property. And then this company will take care of that maintenance problem for the landlord, because that can be a huge pain point for a lot of landlords, right? The 3 a.m. phone calls, my roof collapsed, so they maintain a huge nationwide network of contractors, handymen, and they will take care of that for you as a landlord. That physical maintenance of the property itself, the physical structure of the property, they can take that off your hands as a landlord. So that's something that we're in the process of integrating with our software as an add-on feature if you want to pay a few extra dollars a month for that service.
Yeah, absolutely. That's pretty excellent. Hey, we've got a bunch of people that have come on Clubhouse here, and a bunch of people in and out on Facebook. So let me just say this, that we are Multifamily Unplugged every Saturday morning, 10 a.m. Central. We're here. We're live on Facebook, live on Clubhouse, and live on Zoom. So if you want to interact on Clubhouse, raise your hand. We'll bring you up on stage. Carl, I'm going to ask you to kind of keep an eye on that. And if you want to interact on Facebook or Zoom, use the chat. We're here talking to Brian Davis from Spark Rental, and we're talking about automation and software in the property management business. I have to say this. I'm an out-of-the-box thinker. I love to create multiple streams of income. I like to take a piece of property, a value add B-class, C-class deal where nobody's really thought about some stuff in the past. And I remember, and Carl will laugh about this story because we've talked about it a lot, but I had a deal. I had 20 buildings on a property, and each building had 2 entrances. So that's 40 entrances. Outside of each entrance, there were 2 parking spots, 80 parking spots. I rented those parking spots I started it. I thought, let me just try this, see what happens. We rented each parking spot for $25 a piece. We wound up driving it to $75 a parking spot, and people paid it because they didn't want to walk from the other end of the parking lot to the front door with their groceries or in the rain, right? So they paid this. I added $500,000 in value to this property from the additional revenue. So when you talk about concierge service, that is a huge, huge opportunity there. Valet services, pick up people's garbage outside their door, concierge services. People inherently don't want to do anything. And, listen, so if you can add value to people's lives and they have to pay a little bit of money for it, look how many things you pay 99 cents a month for, some subscription or something. you add value to people's lives, they pay for it. So,
Mike, so Mike, explain real quickly, because I know from a banking, I know, but explain real quickly for the listeners. Just take a minute about how that added value with cap rate, the NOI,
okay.
and all that. How adding that high profit net operating income increases the value of the property. Because I think that's an important lesson. When you think creatively, you could take a property and literally add $500,000 worth of value. So just real quickly explain that to our listeners.
Great question. So what happens is when you add revenue to the bottom line, to the NOI, the net operating income, and that comes from your rents and your other income, right? After vacancy's taken out, you get net operating income after your expenses. So let's say that I add $500,000 to my net operating income, and I have a cap rate. Cap rate is the valuation on a property, and it helps you determine value. If I divide a 10% cap rate into a $500,000 additional revenue, I all of a sudden created $500,000 more in value to the property. So listen, I always say it's math over emotion, right, Brian? And it's the math works. So think outside the box, think creatively, and you'll be surprised at what you can create out of something that wasn't there before.
Absolutely. And the more that you can put the passive back into passive income for people in real estate, the happier they're going to be as investors, because most people, they have another life outside of their investments, career, family. They don't want to be putting any more time into their investments than they have to. One thing you mentioned out of the box thinking with real estate investments, one of the things that we've been experimenting with this year is a program that we're calling Coinvesting, where we're going out and we're letting a handful of our audience members partner with us on real estate deals that we're doing on our own. And these are not large multifamily deals like syndications, for example. These are single family rental properties or flips, deals that are so small that no one else in the space is really doing this. They're not opening it up to other people. But we saw an opportunity to teach people how to invest in real estate by letting them partner with us as junior partners on our own real estate deals. So they can kind of learn as part with fractional ownership in a property. They can see the behind the scenes, learn what to avoid, what to do, and then go out and buy properties on their own from there. We haven't quite figured out how to make it profitable for us outside of the returns we earn on the properties. We have not been charging like high management fees or like deal finder fees or that kind of stuff. We want to be very careful about not stepping on the SEC's toes and being regulated.
Not an agency to mess with, that's for sure.
No.
No. So let me just do this really quick because we've got a bunch of people that have joined here in the last few minutes. So we're Multifamily Unplugged. We're here every Saturday morning at 10 a.m. Today's guest is Brian Davis with Spark Rental. We're really having an interesting conversation about technology and how that plays a part in property management, in being a good operator. But if you're joining us on Facebook Live, good to see you this morning. Karen and Larry and Chris and Mark and Steve, glad that you're here. Emily, Jeff. And then out on Clubhouse, if you're here, Brenda, Omar, John, anybody else I forgot. Listen, if you're on Clubhouse, you want to raise your hand and get up on stage. Carl will bring you up on stage. If you have a question, we'll let you chime in. And if you're on Facebook or Zoom, just use the chat, please. So we got a lot going on this morning and a little bit of technology. So, hey, Brian, do you guys actually own or operate any of your own multifamily stuff?
No, I have owned almost no multifamily properties in my career as a real estate investor. Most of what I've done is single family properties. The properties that we've been doing that co-investing program with, where people partner with us on these deals as like junior partners, those have all been single family properties so far. So no, I confess I do not have a ton of experience in the multifamily space.
Good. You're perfect. So go, I wrote a book called Exit Plan, and it's your complete guide to multifamily investing and why you need an exit plan. And I'll just say this, anybody can go download a copy of it off my website. Grab a copy because it'll give you some guidance. I wrote it because I think that there's a lot of great teachers and trainers in the marketplace, and people teach us how to find a deal, buy a deal, operate a deal. Nobody teaches us how to get out. Nobody teaches us when to get out and how to maximize our profit. And I think that that's one of the things in multifamily that we have to add value and maximize profit. And how do we do that? But you can go download a copy of that for yourself at mycoreintentions.com/exit plan. And you can get there. And people are asking what's the website address. It's mycoreintentions.com. So I hope you enjoy it. So, so Brian, that's you and Carl kind of alluded to this early on in the conversation that everybody starts with the first deal, right? And whether it's a single family deal or a multifamily deal, I had no idea what I was doing. I was talking to somebody the other day and I was really reflecting back when I first went in the multifamily business. I was like, damn, I didn't know anything. And I was a real estate sales guy. I sold hundreds of homes a year. And all of a sudden I make this decision to go from the single family business into the multifamily business. And I said, shit, I'm just doing it. And that's what I did. I went and I did it. And all of a sudden, my world changed, right? So it's interesting. So if you're thinking about going in that way, and here I kind of have a question, but what's the real estate business like in Brazil?
You know, I'm not even close to an expert on it. I don't really have my finger on the pulse of it. Other than to say that I've for the last couple of years, I've been experimenting with real estate crowdfunding and investing in some real estate crowdfunding websites. Up until the last month, that's all been in the US based companies. However, it occurred to me that I can further diversify by investing in some overseas real estate crowdfunding platforms, which it adds another layer of complication. But I just created an account with a Brazilian real estate crowdfunding platform, and the returns that they are paying out are spectacular. I mean, they're paying 10 to 20 to even 30% on some of these deals for crowdfunding investors. And you'd be amazed at how many of these deals are coming in around 20% per year returns. And it's because the economy here is simply less advanced than the US economy. There are fewer wealthy people here to invest in these sorts of deals. There are fewer people who are educated and even interested or pursuing real estate crowdfunding as a financial investor. So they have to pay out these huge returns that, in US real estate crowdfunding, you're really looking at earning 7, 8, 9% annual returns, as opposed to the 20-something% returns that this company in Brazil is paying out. And it's been kind of interesting to just see that different perspective of what a less advanced economy is doing, trying to catch up with more developed economies like the US and Canada and, European democracies. Now the risk there's a currency risk in addition to just the investment risk, right? Because the Brazilian real, the currency here, has lost a ton of value in the last couple of years.
What's the value to the dollar right now?
I think it's around 5.5 reais, is the plural of the currency. 5.5 reais to $1. It's been bouncing around a little bit, but 3 years ago, when my wife first interviewed for this job and first spoke with the school and got hired, it was like 3.5 reais to $1. So that's a big loss in currency value, going from 3.5 reais to the dollar to 5.5 reais to the dollar. And the real could bounce back and become, could boost in value again, or it could keep weakening against the US dollar. So that is an additional risk when you invest overseas, whether it's in real estate or any investment overseas that is founded in a different currency. It adds another element of risk beyond simply the risk of the property not performing well, or beyond the investment risk itself. But
Well,
if you are willing to take those risks, you can earn significantly higher returns in overseas investments.
it's interesting. I remember when I was there, I want to say that the dollar was like a 1.99, or the
So like
Brazilian.
two reais to $1.
Right, right. And it really went a long way if you paid in American cash, right? So you got a heck of a lot more. It was interesting. But hey, so you're doing crowdfunding. So what's interesting is you talked about them paying 20 to 30% on a real estate deal through crowdfunding over there. Tell me this, what is going to happen when we start to change here? Because we're going to change, right? Our financial fundamentals here in this country are getting close to making some changes. I see shades today of 2007, 2008, and it's just a matter of time. It's not if anymore, it's when are we going to start to go the other way. So brings a couple of questions. What's going to happen to the rest of the world? Places like Brazil that are paying great deals like this. What's going to happen to the crowdfunding platform? What's going to happen? How are people underwriting today? How are people looking at deals differently today to make sure that there's that hedge of protection as interest rates go up and inflation starts to set in? What are you seeing? What are your thoughts?
Those are some big questions. um, so the U.S. housing market is tricky, and I'm not an expert on the nationwide housing market in the U.S., but there are still some mismatched fundamentals where there really isn't enough housing to meet demand at the moment, and new housing supply is slow to enter the market because of things like supply chain hiccups around the world, because of things like labor shortages and rising labor costs, rising material costs. You guys all remember the crazy spike in lumber prices, and they came back down, but now my understanding is they've gone back up again. So I don't think that we're quite at that point where we're in a housing bubble that's about to burst. I don't think that it can continue. I don't think housing prices nationwide can continue averaging 9% or 10% appreciation per year. That's just not sustainable. But we do still have an imbalance between supply and demand in the housing markets in the U.S. And until there is more supply than there is demand, I don't see houses or prices collapsing. How inflation plays into that. People have been very fearful of inflation since all the stimulus from the pandemic, and I think that has fueled a lot of the jump in real estate prices and in interest in real estate investing in general. The Fed keeps telling us that inflation is transitory and that it's going to go away any day now. I'm a little skeptical of that, but we'll see. I mean, this is a little bit uncharted territory as far as the degree of government support, as far as stimulus and government just flooding money into the economy. So how we kind of come in for a soft landing versus a hard landing here, I don't know.
So you said that you've done some crowdfunding yourself. Are those platforms scrutinizing deals a little bit differently today than they had been over the last year, 2 years? Are you looking at deals differently today than you might have looked at over the last year or 2 years?
Yeah. So one of the real estate crowdfunding platforms that I invest in is called Streetwise, and they specialize in commercial buildings and in particular office space, which obviously got hit really hard during the pandemic. Everyone was working from home, right? So you saw a jump in defaults on office leases and rents. You saw a lot of commercial tenants, office space tenants, non-renew their leases moving forward. But Streetwise they've been okay for a couple of reasons. One is that they invest in tertiary markets for the most part, and secondary markets. They're not investing in places like San Francisco or New York City. They're investing in places like Greensboro and these smaller cities that have actually done pretty well in the pandemic, and they've doubled down on some of those trends. Hitting more satellite cities, hitting these smaller cities that have been the beneficiaries of population move, right? A lot of people have moved out of cities over the last year and a half, and they've moved both to the suburbs and satellite cities, and also to these kind of smaller markets, these smaller cities. So yeah, I mean, I think no matter what you're investing in, whether it's real estate or stocks, commercial properties, residential properties, you want to pay attention to these sorts of trends, um, because they do matter, and we are living in I hate to use the word unprecedented times, because unprecedented has been thrown around so much in the last year and a half. But it's true. No one has a crystal ball for how the country is going to look in a year from now, 2 years from now, 5 years from now. So I think you just have to pay more attention than ever before to some of these trends, because they have accelerated and they have changed a little bit since the pandemic hit.
Yeah, interesting. Well, listen, we are winding down here. I can't believe how fast this morning went. Kind of crazy. But let me just ask, does anybody on stage on Clubhouse have anything that they want to ask or add to the conversation this morning? Great. Good to see everybody here. Big crowd on Facebook this morning. That's been awesome. If you have any questions or comments, throw them in the chat. Carl, any last thoughts or comments?
Yeah, listen, I know it's amazing, Mike, how these conversations go quickly, because we could literally talk for hours about this stuff. And, I think it's great when we have a guest that has international experience as well. And you and I have been talking about, was it last week or the week before, Shannon was on talking about crypto and how crypto and blockchain is going to come into the title and investment. So, it's all interesting stuff. Thank you everybody for being here. And for those of you on Clubhouse, make sure you follow Mike and I. We'll have an opportunity to follow you back. We do this every Saturday morning. Set those notifications, because Mike and I also do a couple of other clubhouses during the week. We do $1 million sales secrets and Think and Grow Rich, and Mike does other real estate rooms as well. So, click on us, follow us, and set those notifications. And then other than that, Mike and Steve, thanks so much. I think it was a great conversation today.
Yeah. Thank you, Carl. And just, that other room on Clubhouse that I do is a Monday afternoon at 2:00 Central Time. I do a real estate creative funding class, or a room, I should say, where we talk about, no money down deals, creative financing, different types of funding. And this week we're going to talk about follow-up. So it'll be interesting. So I'm glad that everybody's here. And Brian, any last thoughts, comments, anything you want to get in? And please, by all means, tell people how they get a hold of you, because I think that, there's going to be some people who want to take a look at your software and see how they can utilize it in their own real estate operations.
Absolutely. My last parting thought is, boost your savings rate, boost the percentage of your income that you put towards investments, because your investments will take on a life of their own faster than you think. Compounding, people kind of discount it because it takes years, takes decades for compounding to work. I can tell you that's not true if you are investing consistently and investing a reasonably high percentage of your income. So focus on boosting your savings rate, invest it, and your money will take on a life of its own faster than you think. As far as how to reach me, please come to sparkrental.com. You can contact us through that site. You can email us at support@sparkrental.com. You can find us on social media channels. Check out our free stuff. Most of the stuff we have is free. Free video courses, free software, free webinars, and obviously lots of free content. But please don't hesitate. Reach out to me anytime. My partner Denny and I, we respond to every email that comes to us. We respond to personally, and we look at it personally. So stay in touch. Let us know how we can help you build passive income from real estate.
Yeah, appreciate that, Brian. And listen, big shout out to Denny. Sorry he couldn't be here this morning. Would have liked to have met him. Maybe we'll have the opportunity to do that. And to Tara and Emma for getting this all put together at the last minute for us. And again to Anna for putting the marketing stuff together. So, hey, it's been a pleasure to meet you. I'm honored. Carl, what are you doing this weekend?
Just the normal teenage stuff, mostly acting as a chauffeur for my 3 teenagers. Although my son wants to go to the Army Navy store because he's into paintball now, so I got to go buy him a whole bunch of special forces stuff at the Army Navy store. But other than that, just kind of hanging out. How about you, Mike?
Listen, why don't you just take your son, Carl, to the recruiting station for Army Navy?
Yeah, he's not old enough yet, but he's got a couple more years. That's going to be a surprise for him.
Yeah. So I just had that conversation with my son's mother. So that's kind of funny. But hey, what am I doing? I have a little bit of work I have to do this afternoon. I got a coaching client that I'm going to spend some time with. And then it's a beautiful day in Chicago here. I'm definitely going to go for a walk later and just get some fresh air because it's been chilly the last few days. But
yeah, but Mike, listen, I do know that there's some veterans on the call with us. So just, all kidding aside, I always like to thank the veterans for their service because, my dad was a Korean War guy.
Yeah.
And on the Korean War Memorial in Washington, it says there's 4 words, and it says freedom is not free. So for all of you that serve in the service, I just want to thank you. Thank you for your service. So anyway, Mike, that's it for me.
All right. See you soon. All right, everybody. This was Saturday morning multifamily unplugged. To all the people that have checked in from everywhere, we have people from Brazil and Minneapolis and Delray Beach, California, and Northern California. I know that we have people from Illinois and Chicago and all over. So I'm glad that you were all here this morning. Any questions or anything that we can do for you, don't ever hesitate to reach out. You can find Carl at yourfocusguy.com. You can find me at mycoreintentions.com. Love to network, love to meet people. And until next Saturday, everybody have a great week. Brian, thank you so much. Carl, have a great weekend.
Thanks for having me.
Thanks, Brian. Talk to you soon.